Want to thank everyone for joining us today on the TradeXchange Week Ahead webinar. Just a quick recap of last week, and then we'll just jump into this week. Thank you everyone for joining us this week. We understand it is a holiday weekend, and we appreciate everybody joining us, and especially in our Zoom webinar as well as our streams. As always, if you have anyone has any questions, just shoot us a message via the chat bot, and we'll be answering those at the end of this webinar. We'll be keeping it very quick since it is a holiday weekend. So start off, we'll just go over the week and then we'll jump into what we're looking at for the coming up week. So the markets ended the shortened week up about 1 to 2%, with the NASDAQ the weaker of the three yet again. The Dow is down about 7% from highs, which is amazing, and the S&P is up over 12% from October lows. One area that we'll be watching, that we have been watching for quite some time, ever since the Ukraine-Russia crisis, is crude oil. What can we say about crude oil this week? But wow. Who would have thought going into the winter season that we would be trending at recent lows around $75, down about 5% on the week? That's something we'll be keeping a close eye on as the winter season continues, especially in European mindsets and on the discussion of the oil price cap. Markets saw continued relief of a policy shift from the Fed following the FOMC minutes released on Wednesday. A majority of Fed speakers believe a slowdown of rate hikes would likely soon be appropriate. The VIX, which we have been mentioning for quite some time, continues to show no fear. Until the VIX shows some fear, the direction of markets will continue to pop higher, in our opinion. What happened this week? We were down over 10% and 40% from the October lows, headed right into the key level support of that 20 mark that we've been talking about. Not just us, people across the street have been mentioning that 20 level VIX support as one of those key levels on watch. Overseas, we continue to hear headlines of a COVID outbreak in China. And as we know, they have that zero COVID policy. The question we have is, how much will this affect supply chains and in fact impact inflation yet again? Adobe came out with their Black Friday sales, which hit a record of $9 billion. Where is the recession? The consumer is so strong, it makes you wonder what is really going on. Is this not a recession? Is this all just consumers piling on debt? All we know from our discussions, our conversations, our research, when we speak to restaurants and stores and developers, they speak with us and tell us one thing. If the consumer is willing to pay these prices, why would they ever drop? So we wonder how well inflation will flare, and the consumer is so strong. If you owned a small business, if you owned a restaurant, if you owned a developer, if you were a big company and the consumers were paying the prices they're paying right now without hesitation, what makes us believe that prices will fall and benefit the inflation side? That's the question we've been asking ourselves. This week, we have a lot on the agenda with the Fed speakers, employment report, JOLTS job openings, consumer confidence, personal income and outlays, and much, much more. It could be a very interesting week since we are going into the Fed announcement on December 14th and the Fed blackout period starting on December 3rd. So we'll just go over this week, what we're looking at, and then answer any questions we have at the end of the webinar. Upcoming US and world events, we still have some earnings that we'll be watching. Interesting this week is filled with a lot of economic and world and US speakers. Monday, we have ECB's Lagarde. We have Fed Williams and Bullard. Tuesday, we have the consumer confidence. NATO meeting begins. We have on the European side, they have the economic sentiment, Germany's CPI. Canada, we have monthly GDP and GDP. Wednesday, a slew of economic data. Fed Powell is speaking. We have China manufacturing, Fed Bowman. Thursday, we have personal income and outlays, which is also a key inflationary point that is being watched. We have Fed speak with Logan, Barr, Bowman, Biden and Macron meeting, the European unemployment rate and PMI manufacturing. Friday, we have the most important economic data point for the week, which is the employment report. We also have more Fed speak, as well as ECB's Lagarde. Company events for the week, as always, and we have your top conferences for the week. Economic calendar. So what are we watching for the week? As you can see, we have the red, which is the Fed speak, which we always be watching, and we always provide commentary in the news desk. That is just some of the aspects we believe are market moving during this whole inflation and rate discussion. So we have Fed speak always on watch. We have Fed Chair Powell speaking on Wednesday, which will be a clear indication if they does have any commentary regarding monetary policy. Economic wise, what do we watch? Monday, not much on the agenda, as you can see. Tuesday, a few of the home price indexes. We have consumer confidence, and as always, the API crude oil data for any of you oil traders. Wednesday, ADP employment report, GDP, international trading goods, Chicago PMI, JOLTS job openings, pending home sales, beige book. A lot of information on Wednesday. Thursday, jobless claims, personal income analysis, which is a key inflation point that we have to watch. And on Friday, the all-important employment report. Your international economic calendar, a lot as well. So we have a very busy economic week, especially since we had that shortened week last week. Economic data, as always, we do bold out some of the big names that are reporting. These are some of the big names coming up this week on your earnings front. Your fear and greed index, continue to see on the greed side. We've been in the 60s for the past few weeks. Currently at 64, middle side greed. Weekly sector performance, green across the board. Strength in utilities, materials, healthcare, financials, real estate, consumer staples, even energy, with oil down over 5%, energy still was trading higher for the week. NEC comparisons compared to COVID. Continue to base. We saw a test over here. We talked about that test. We saw that test. And once that test happened, we're back above to the high-end test. So we'll keep an eye out and see if if those levels continue. We'll go over some charts later on as well. Your 10-year treasury constant maturity minus 2-year treasury. We talk about this every day in the news desk. We provide the updated numbers. It's weakness. This is a recessionary indicator. So, like we said before, what is really going on? Who knows? Target rate probabilities for the December meeting, currently at 75% for the 50 basis point. We're at 24% for a 75 basis point hike. Year-to-date percent returns, we did see an uptick in nat gas, up about 12% for the week. Heating oil saw a downtick. The VIX saw a downtick, a very big drop in the VIX. Gasoline, a downtick. Not much else big except for like crude oil. We did see that 5% drop about. So we are watching commodities, especially on the energy side. Your AAII investor sentiment survey, not that big of a change, as we saw the bearish mindset continue to stay at that 40% level. We saw a little uptick on the neutral mindset, but still a more neutral to bullish mindset that we've been watching over the past few weeks. IPO lockup expirations, we have one on Monday. Some expected IPOs. We do have a big list on the FDA calendar. We'll also provide updates on those throughout the week if we see anything adding or commentary regarding these specific headlines. Sector Outlook Weekly, continuing to see energy as the only green. Interesting to see consumer staples slowly working its way back to green. Utilities as well, only down 2%. Healthcare only down 3.5%. So we're starting to see a stronger area in certain sectors as consumer discretionary, communication services, real estate, information tech still are extreme red on the year. Charts. We'll jump through these real quick. And then I'll mention members. If anyone has any questions, just shoot us a message. And we'll in the chat box or email, and we'll answer as much as we can. Gold. No changes to the chart from last week. Gold ended the week right at that support level at 1750s. We mentioned last week. We continue to watch the range of 1700s to 1800s. I know it's a big range, but they did have these big moves following that CPI report. So the range is pretty big, but we are trading right at that support resistance line on gold. Volume is key, especially on a busy week like this we have coming up. SPY daily, we added a new uptrend at this point right here that we'll be watching, similar to this test to the highs. We're watching this level right here on the SPYs. We saw a continued bounce of support that we mentioned last week of the 390 support. We broke above 400, but on very little volume. We understand it was a shortened week, but the volume was non-existent. So we are very hesitant on this move until we see more volume coming in for an upside move, or even that break below that 400 level. On your NASDAQ daily, no changes to the chart. Last week we mentioned that we are watching a large range in the NASDAQ. We continue to trade in that range. Our range is a 210.5 to 11.5, but we've been seeing a little formation at this point above 11,000. So we're now watching 11,000 support and 11.5 on the upside for any indication move in regards to your NASDAQ composite. SPY daily, more looks with moving averages. We are watching this 200-day moving average. That was a test last time we saw a move off of lows. We are right by that test. So we are watching this closely to see if we test and break down again like last time, or a test and an upside swing. As always, members, volume is key. Your triple Qs on a daily, trending right still below all three major moving averages. We are watching this very closely in regards to any move on that levels above the moving averages. So that's on your triple Qs. IWMs as well, still trending right on moving averages. We did mention as well as IWMs and the diamonds, the DIA, the Dow Jones ETF, are the strongest amongst the group, which is quite surprising since IWMs typically would move similar to the triple Qs. But we are seeing more strength in IWMs trading above moving averages. 10-year yield. So we are watching the 10-year yield trending right at those high levels. We're watching, you'll see more clarification on another chart that we have coming up, but we are watching this as a moving averages look on your 10-year yield. This is a little more detailed on the 10-year yield. No changes to the chart, members. As we mentioned, once that uptrend was broken, that weakness continued, and it continues as we move on. This is a weekly basis. Excuse me. So we are watching 3.5% to that 4% correction on the upside move to the downside move. But right now we are still in limbo land in the 10-year yield. I think we'll get a much better clarification this week as we do have some slew of Fed speakers and some very key economic data points coming up. Diamonds, what can we say? Look at this, right at that level of that previous move. So we're at that point now where it's very important for the bulls to see a continued upside move. Or on the bearish mindset, they're thinking, okay, we tested it just like last time. Is it time for that sell-off again? Who knows? IWM weekly, no changes to the chart. Look at this. It's just building right on these trend lines. Last week, the IWM tested the downtrend almost perfectly. This week, we tested the uptrend almost perfectly. We tested it at this point, no break. The mindset is still on these trend lines. That's your IWM on a weekly basis. HYG daily. This is a moving average look. Your S&P 500 weekly. No changes to the chart, members. We always clarify that so we understand if we did add or take something out when we mentioned no change to the chart. So no change, it means nothing was changed from last week's view. No change to the chart. The downtrend from October is still in play. The uptrend from mid-October is still in play as well. So we are watching very similar to your IWMs that we saw on the last time on the weekly basis. So it seems like the markets are trying to figure out what direction they're going to go, and they're building on these technical patterns. Your VIX, what can we say about the VIX? The VIX weekly, we are watching that 20 level support, members. It seems like every time it tested, boom, tested, pop, tested, pop, tested. Are we going to see the 14, 15 handles, or are we going to see a tested pop? Very interesting to keep an eye out for the next move on your VIX. Oil daily, no changes to the chart. We ended the week on a key support level, very similar to back in the September, October range. The question comes down to, just like the question comes down to on all the other charts, will this hold? And the volume is key. If this volume breaks, we could test those 70 level supports. We are watching these downtrends. We are watching support resistance levels on crude oil. It'll be interesting to see what happens coming up this week, with a lot on the agenda regarding economic data, Fed speakers, and more discussions on that Russia oil price cap. US dollar daily, and no changes to the chart. It's testing trend lines. It tested here, 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 and here. So we are watching this on the US dollar, watching the support levels, trading right off that support that we had there. So we are watching US dollar very clearly. We believe the US dollar will dictate the next move in markets. So we are watching this very closely. And then you got Bitcoin. What can you say about Bitcoin? Bitcoin is as well in limbo land at this point. No one knows what's going to happen next in regards to not the FTC. Sorry about that. The FTX debacle. We have that 15 level downside, 17.5 on the upside. We'll see what happens on this Bitcoin. And SMH daily, we added another little moving average chart on the SMH, is trading right on that 200 moving average. Tested it. We are watching again in front of the test on your SMHs. So members, that's your week ahead webinar. As always, if anyone has any questions, comments, excuse me, once again, questions or comments, shoot them in the chat box. We have a few in the email we'll be going over. We'll go radio silent for a few seconds while we go over these emails. And then if anyone has any questions, we'll answer them as well. As always, one of the questions are what are we looking at? Our thoughts on the markets. Members, like I said, we came off of a shortened week on a very little volume, with a typical mindset of a bullish activity around Thanksgiving time. We are going into the quote unquote Christmas rally. We'll see if that has any effect on markets. Right now, we have a very busy week coming, members. We have a lot of economic data. We have a lot of Fed speakers. We have a lot of international speakers on the agenda. So right now, our mindset is follow the trend. The trend right now we are watching is on the bullish mindset until something changes on the Fed. In regards to the Fed, what do we mean on the bullish, dovish correction mindset? Right now, the Fed is on a dovish path, in our opinion, looking to cut back a little on the rate hikes. We'll see. We have very important data coming into the markets going into your December meeting. We have unemployment. We have the employment report. We have another CPI data point coming up. We have Fed speakers this week, especially with Fed Chair Powell. So we'll see if there's any change in that mindset going into the announcement on the 14th of December. So when it comes to what we're looking at, we're watching these economic data points for the week. With earnings season basically over, not much on any individual name that we'll be watching. Right now, it's the Fed. Clear and simple. We believe it's the Fed that is driving this market. We believe it's the US dollar that is driving this market. And right now, the yield markets are not that active. We mentioned earlier, they're in limbo land right now. They don't know what's going to happen next. So we're watching the US dollar. We're watching the Fed speak coming up. And a lot of these key economic data points, we are very closely watching for any move in any direction. If anyone has any other questions, some people asked us about some of the stuff with the TradeXchange. We are looking to do, members, a webinar, hopefully in December, with a lot of the new changes that are coming. We're having a new squawk, which we're very excited about. Much faster, better latency, cleaner. So we're looking to do that, as well as the TradeXchange community room. We are looking to get that as well. Hopefully in December. So once all those are released, we'll be doing a webinar in regards to all the new great changes that we're excited about on the TradeXchange. So everyone, well, I want to thank everyone for joining us today. Hopefully everyone had a wonderful Thanksgiving holiday. Check the news desk to get yourself ready for a Monday morning. Thank you. Enjoy. TradeXchange out.